Let's take a look at Misti, and let's also take a look at the distribution rate and see where that's actually coming from and where we're sitting at currently. Hello my friends, this is Legend. So today we're going to take a look at Misti and see where it's at. Is there any kind of resistances, supports that we can watch for next week? And let's also take a look at that distribution rate. Misti will be going X this week, and I wanted to look at that distribution over the last few months and see what those rates actually are to understand what that monthly distribution rate is versus that yearly rate. And the one that they show on the website here is that yearly rate. So let's just go ahead and jump right on in. So here we are on the Webull chart, and as you can see here, we had put in this resistance line, that's that orange line. And we have this support line, which is that red dotted line right here. As you can see, Misti has been trying to trade within that range for the last 5 weeks or so. So we have that resistance line at about $23.42, and we've got that support line at about $18.55. We closed on Friday at $20.63. So we are still staying within this range, and I think right now that's kind of our working range currently. We'd like to keep it above that 18.55. I prefer to keep it between that 19 to 20-ish range. I'd like for that to be the bottom end, but we'll see what next week brings us for that. So let's take a look at Mr. And Mr. is the underlying of Misti. So as you can see here on Mr., the range that we're working within on Mr. is that roughly 344 to about 231. So if it can stay within that range, I think we can keep pretty steady with the distributions. If we can break out on that upside, maybe we can start gaining a little bit more on the distribution, but I definitely don't want it to break down on the downside anymore, as that will lower the price, and by lowering the price of the stock, will lower that distributions that we would actually earn. So think about it. If you're earning 10% on a distribution, 10% of $100 is $10, but 10% of $10 is only $1. So if you're earning a 10% on your distribution monthly, and if the price of the stock is $100, then you're going to earn $10 per share on your distribution. But as that price would drop, and if it drops all the way down to from that $100 down to $10, now that 10% of that $10 stock price would be $1 per share. So that's why I say that we don't want that price to necessarily keep dropping. Yes, we'll still earn distributions, but the amount that you earn, the dollar value that you earn, will decrease. The percentage may stay the same, but the actual amount that you would earn will decrease. So that's why we want to make sure that we don't erode the stock price by paying out too much in a distribution. We want to keep that stock price healthy so that we can pay out a nice healthy distribution. So talking about distributions, I've got a little spreadsheet that I wanted to kind of just show. And before we go to that, if you don't mind hitting that subscribe button, and if you like this kind of content, make sure you smash that like button. So let's slide over to my spreadsheet. Okay, so here we are on my spreadsheet. Now this one here is just something I threw together. It's not really anything for tracking or anything like that. It was really just for helping to explain the distributions. So for this one here, I'm going to use Misti, and I'm only going to use it from around that October date, and that's about the time that it started paying out every 4 weeks on the distribution. Before that, it was actually paying out once a month, and it would pay out around that first month, right? First of the month. Then they switched over to paying every 4 weeks. So I just did this from the point of the every 4 weeks just to kind of show you what those distributions look like. So this first one here, as you can see, I have an X date right here of October the 24th, 2024. The close price before the X date. So this would be the day before it goes X. The day that it goes X is the date that the distribution comes out of the price of the stock. So the day before that price gets adjusted for that distribution was $30.67. And again, this is for Misti. I'm just using Misti as an example. It paid out a distribution of $4.20. That gives you a percentage of 13.69% of the price, with a yearly percent distribution rate of 164%. Now, keep in mind, this says 7 weeks. It did start on this day. From this point out, it was paid every 4 weeks. But from the time before, it was every month. So this one actually included that month plus a couple more weeks until it actually got to the point where it hit that Group D distribution. So this one here will be slightly skewed because it is not just 4 weeks. This is actually a 7-week distribution. Okay, so keep that in mind. Now, so just for also viewing purposes here, I am stating that you can put how many ever shares you have, it doesn't matter. It's scalable, right? You can have 100 shares here, you can have 1,000 shares here. So for every single share, this is what you would be earning, right? So for just one share, buying it at the day before X so that I would get paid that distribution. So I purchased those stocks at $30.67. So one share at that price minus our distribution over here of $4.20 gives me a running risk total of $26.47. So therefore I've earned back 13.69% on my money. And again, keep in mind, this one is a little skewed because of the 7 weeks. So let's move to the next distribution pay period. So on November 21st, 2024, this is a 4-week period from the last one. The closing price before X date was $44.40. It paid out $4.42. That's a 9.96% distribution from the price of the stock, which gives us 119.49% for a yearly distribution rate. So let's remove that $4.42 here from our running risk of the capital. Took us down to $22.05. So we are now at 28.10% of our earnings back. December the 19th, day before expiration, it was $33.52. Paid out $3.08 in distribution. That's 9.19% from the price of the stock. So that's a yearly percentage of 110.34%. So we'll remove that $3.08 distribution from our running risk total. So we're down to $18.97. So we have earned back 38.15%. On January 16th, day before X, $30.69, we earned $2.28 in distribution. So that's 7.43% of the day before X date price, with a calculated percentage of 89.12 yearly distribution rate. So reducing that $2.28 from our capital, we are down now to $16.69 still at risk. But we've earned back 45.58% of our original capital. Now, we are not purchasing additional shares. We are only holding the distributions for this example. February the 13th, the day before X date, $26.86. We earned $2.02, and therefore that is about 7.53% of the stock price, which puts us at about a 90.32% yearly distribution rate. Removing that $2.02 from our capital puts us at $14.67, and therefore we have earned 52.18% of our capital back. And last but not least, March 13th, price of the stock at $20.22 the day before X. We earned $1.38 in distribution. Therefore, that is 6.81% distribution of the price, and therefore we are at 81.75% yearly distribution rate. Removing that $1.38 from our capital at risk takes us down to $13.29. So that has us at 56.67% of our capital back. So up to March here, we've already earned back half of our invested amount, over half, in just 6 months. So even if it takes us another, say, 6 months, and we get to that 100%, then at that point, all those distributions that we'll earn will be free and clear. We will no longer have any skin in the game, and that distributions that you would earn at that point could be used to purchase more shares of Misti or purchase another stock that you're looking to get into. But either way, it's not your money, it's not your capital, it is distributions that's being paid out by YieldMax for you just keeping the shares. And at that point, it doesn't cost you anything to keep the shares. So therefore, you would have no reason to sell them, especially if it's still paying out distributions. And that's the beauty of it. So of course, if we are keeping with this 6.8%, then we will be looking at another roughly $1.36 for the distribution. And that's if we're keeping it at about a 6.8%, assuming that the price is around 20 bucks on the close of Wednesday, which is the day before the X date. Now that's not guaranteed, that's just my guesstimation. I'd like to see it around about 8% per month. At 8% per month times 12 would be 96% in a year. So basically, whatever you invest in month 1, by month 12, you have almost earned all of your invested money back without selling shares. So therefore, you keep the shares and just earn free distributions. So I just kind of wanted to go over a little bit about the distributions, how they're actually calculated, right? That yearly distribution rate that you see on the website where it says 80 something percent, there it is, 86.55%. So this number will change as it goes. So that's pretty close in line to what we're seeing right here. So I guess for my guesstimation, I am probably looking at around about $1.40. What's your thoughts? What do you think we're going to earn? I hope I'm low, but I hope I'm not too low. I don't necessarily want them to pay out too much because I do not want the price to drop down out of that range. I don't necessarily want that. So I think I'm going to wrap it up right there. Don't forget to like, subscribe, and share this video. It'd be much appreciated. And as always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, legend out.